Did you know the top 5 epic rebound sectors retail investors absolutely must catch once the USA and Iran war ends? Because breaking news just hit that Trump agreed to a 2-week ceasefire, brokered by Pakistan on the condition of opening the Strait of Hormuz for 2 weeks, while negotiations proceed, though nobody knows if this will lead to a true end of the war. But listen, right now most people are just reacting to this breaking news and executing a panic sell, wondering if the war is over. But the smart money is already calculating exactly where the cash will flood the moment it stops. So today I am going to completely break down the top 5 sectors that will explosively skyrocket the exact moment the bloodbath ends, by digging through Wall Street reports and brokerage analyses so you can understand it all at once and prepare. Before we dive in, let us clarify the current situation since the war broke out on February 28th. Market volatility has been extreme, with daily news heavily stimulating fear, telling everyone to sell right now. But let us look at one cold, hard fact. Will this war last forever? Because the ceasefire news this morning shows reality. And more importantly, the legal limit for USA military operations is a maximum of 60 days, meaning this crisis is highly likely to peak in mid-April. Furthermore, with a USA and China summit scheduled for May, it is a fact that this is an issue with a definitive end. So the Trump administration structurally has a clear justification to wrap up this conflict. Therefore, the action an investor must take right now is obvious. Do not let the immediate fear shake you into a panic sell. Instead, calculate the exact moment the war ends and prepare your portfolio for what comes next. The real alpha starts here. What sectors will skyrocket when the war is over? To understand this, you have to see which areas are being artificially suppressed by the war. It is just like pressing down on a spring. The moment you let go, it violently bounces back up. Right now, the war is pressing down hard on that spring. So when the war ends, the sectors that were suppressed the hardest will launch the highest. Starting with the first sector, semiconductors, you might think it is obvious, but just like during the 2020 pandemic crash when Samsung stock plummeted, but then more than doubled as earnings exploded, we are in a uniquely similar situation. Looking at the preliminary first quarter earnings announced by Samsung on April 7th, they recorded 133 trillion won in sales and 57 trillion won in operating profit, surpassing last year's entire profit in just 3 months. This absolutely destroyed the market estimate's upper limit of 50 trillion won, beating expectations by a massive 17 trillion won, showing an insane 755% surge year over year. These incredible numbers are possible because big tech companies are pouring 144 trillion won into AI data centers, creating an unsolvable supply shortage, causing DRAM prices to almost double. On top of that, Samsung and SK Hynix completely monopolize pricing power through their exclusive HBM supply structure, operating on a pre-order basis. But despite this mega earnings surprise, foreign investors dumped massive amounts of stock, keeping it heavily suppressed. Once the war ends, an insane rally will begin as the stock finds its rightful place matching its earnings, meaning the fact that brokerages upgraded the Samsung target price to 290,000 won proves their fundamental earnings are absolutely stellar. The second sector, petrochemicals, took a direct hit to naphtha supply due to the Strait of Hormuz blockade, causing factories like LG Chem to halt operations and naphtha prices to double in a worst-case scenario. But when the war ends and sea routes open, naphtha prices will plummet drastically, reducing cost burdens. So when halted factories resume full operations, the formula for a massive sales rebound will be established as the margin gap explodes. The third sector, aviation and travel, saw its profits crushed as WTI crude oil spiked to $112, making fuel too expensive. But the moment oil prices turn downward after the war, a perfect turnaround will unfold as suppressed passenger demand explodes. The fourth sector, automobiles, hit all-time high exports in March with solid earnings. Yet the stock crashed as foreign investors executed a massive panic sell due to surging exchange rates, leaving the forward PER at a historically low bottom. This means the stock fell due to external variables, not bad earnings. So when the war ends, exchange rates stabilize and foreigners return. It is a perfectly undervalued blue-chip stock that will be the first to find its normal valuation. The fifth sector, construction and infrastructure, will see multi-trillion-dollar mega-projects pouring in to rebuild destroyed Middle East infrastructure like Qatar LNG facilities. So Korean construction companies that have built networks over decades are highly likely to monopolize this reconstruction boom. The action plans you must confirm for successful investing are the moment oil prices start dropping, along with the shift to foreign net buying of large caps and confirming the official second quarter guidance from the Samsung earnings call on April 30th. Of course, you must realistically acknowledge the risk factors like a prolonged war and sustained high oil prices. But ultimately, on the day the war ends, the sequence of falling oil prices, stabilizing exchange rates, and returning foreigners will trigger an explosive rally. The heavily suppressed semiconductor, petrochemical, aviation, automobile, and construction sectors will rebound sequentially. So we need to look at the even bigger picture here, which is the ongoing semiconductor supercycle. In the face of the massive AI semiconductor supercycle, fueled by 144 trillion won, the war is just temporary noise. So do not forget the truth that when the fog of war clears, smart money flows to where the earnings are.